Hello, my name is Marcus Solibida. I'm the Managing Director of BASF Venture Capital. Today, I would like to talk about corporate venture capital and what we do at BASF Venture Capital, give you a short introduction, and after speaking about what we do, I would like to discuss the different, let's say, strategic approaches you can have in corporate venture capital. So let me get started with the first quick introduction of BASF Venture Capital. So as you can see, this is our vision as BASF Venture Capital. So we try to catalyze change for BASF and of course the whole chemical industry. So what are we doing today? Where are we present? If you look at this slide, you will see that we at BASF, we are following a global corporate venture capital approach. We have been founded in the year 2001. So we are one of the older European corporate venture capital companies. Actually, there were just 7 corporate ventures in 2001 when we started. Today, there are more than 100 corporate venture capital units in Germany alone. We have a team of 14 in different parts of the world. We have a fund of $250 million, which is an evergreen fund structure, and we can invest in A and B rounds. Typically, we could do also seed or growth capital, but we kind of focus on Series A and Series B. And we, of course, just do minority shares and ticket sizes between $1 and $5 million in the first round. And of course, we are able and want to do follow-on rounds, especially in successful companies. So today we are headquartered in Ludwigshafen for our European activities. We have a strong team in China with a colleague, with 3 colleagues full-time, another group of 2 who are, let's say, part-time supporting the team. We also have a colleague in India. We have an office in Israel. Also, since last year, we are based in Brazil, which is an important market for our crop protection business. And of course, the United States, where we are at the East Coast and West Coast. And also more recently, we also decided to set up an office in Austin, Texas. And we will also have one portfolio company already. We are quite excited about this part of the United States. So what is the strategy of BASF Venture Capital? What is our investment scope? Here you can see that at the top priority for us is to look at new business models, artificial intelligence, digitalization. So examples for that are anything around ag tech, digital farming. We have a $9 billion crop protection business, nearly $10 billion crop protection business. That is where we have a high interest to look into new business models for this part of our business. 3D printing, for example, is interesting in terms of new materials. What has been injection molding to a certain extent will be 3D printing in the future. That's why we are very interested and excited about this industry. Then we look, of course, how existing business models of BASF can be enhanced by digital tools. And we also want to understand how our innovation activities, how our R&D activities can be disrupted by new technologies. We also have a look at how new platforms will change the way our industry works in terms of distribution channels. So we expect that the traditional value chain in the chemical industry certainly will be disrupted and currently already is disrupted by players that we can see in the United States, for example, but also in China, where you can see already specialized industry platforms coming up. So this is kind of important for us to observe how the value chain in the chemical industry will be changed by the entrance of new players and by the use of platforms and change in customer behavior. And then finally, last but not least, we also look into, of course, as BASF, we are interested in any new chemicals, new materials. We look at innovative chemical processes. Sustainable chemistry and materials is quite important. Also the topic of batteries or energy storage. So the whole topic of sustainability is becoming more important for us. How can we, let's say, foster the development of the chemical industry towards more sustainable solutions? We are very interested to learn about that and also make a contribution here. So these are some examples from our existing portfolio. So you can see the areas of digital farming where we have some interesting investments. We are, as I mentioned, also in the space of platforms, artificial intelligence, where we have made investments in Europe, North America, China. 3D printing, as mentioned, is an important area for us, where also in US, China, and Germany we have investments. We are increasingly looking at investments in the space of sustainability, be it biodegradable plastics, be it carbon conversion, or be it high performing large volume storage batteries, as an example. We still look at advanced materials as an extension of our current business activities, and of course the space of biotech, somehow related to our crop protection business, is also important for us to look at alternatives in that space. We, as BASF, we can also invest in funds, other venture capital funds, and we do that mostly in order to prepare the ground in regions where we are not yet so familiar. That is true for India, where we just started with our own office a year ago, and a fund investment a little bit more than a year ago. Same is true for Brazil, where we have selected SP Ventures as our local partner who supports us to look at interesting deal opportunities, not just in ag tech and food tech, but we already see more to come. The same is true in India, by the way. And of course, we also have investments in funds in China, which help us to evaluate the great market opportunity that we see in that part of the world. So having talked about BASF Venture Capital more in detail, I would like to go back now and talk about what could be, in general, strategies for corporates to work on with your corporate venture units, because that's kind of the question of this conference: is in which way can you work with your corporate venture unit in order to make a difference, in order to test about new technologies and see what's happening outside. So with this slide that I'm currently showing, I'm trying to give you an overview of the different strategies that corporates, not only in the chemical industry, but in general, in different industries, could evolve in terms of building up a corporate venture unit and working with this corporate venture units towards that specific strategic goals. Because the special, let's say, characteristics of corporate venture capital, of course, is that besides financial targets, we all follow also strategic targets. And what these strategic targets are, it's something I would like to refer to here in that slide. So this is not, it doesn't have, let's say, it's not something I would call a scientific a summary, but something which is a result of many years of observing what kind of corporate venture strategies we have seen as teams, and so let me quickly summarize what I see as corporate venture strategies in the market. So the first on top, I would call the defensive passive strategy. So that is if you feel, well, you should have some people to watch out what's happening outside of your corporate. You try to understand what will happen in the industry in the future, but you're not extremely active. You are just watching. It's kind of a scouting function, what I would call this defensive passive approach. So having a corporate venture unit that you can see business plans, that you are able to engage into conversations with young companies, startups, but you are not really committed to a specific investment strategy. You're more trying to understand what's happening, what kind of business plans are written today, what does it mean for us, can we learn something from it? So it's, as I said, defensive, passive. You don't want to miss something, and that's why you look at a number of business plans and have done that. And you do that with your investment team, and maybe very selectively you do 1 or 2 investments a year. That is one approach. A more active approach, but with a similar rationale, would be what I would call a defensive but active investment approach. Here you would still try to understand what's happening in the industry, especially what's happening in the industry that could be a threat to our own incumbent business. And then you would invest in these businesses who have this disruptive characteristics and who could be challenging competitors for you. So that is a slightly different approach compared to the first one, where you just try to understand where are risks or where are new threats evolving in your industry. Here you take a more active approach where you maybe invest in your competitors because you say, well, we need to understand what these guys are doing. So let's take a stake here and try to understand what that means for our existing core business. Another corporate venture capital strategy that you see quite frequently is focused on the optimization of internal processes. So here the third line. That is everything, any company, any vendor, young company that has developed something which helps you as a corporate to become more efficient in your processes. And so that is simply looking at who is working on a new way, for example, to do maintenance, predictive maintenance tools, HR software, anything you can use as a corporate, and where you also reach out to the startups and you present yourself as a potential client of these startups. So that is all about the topic of optimize internal processes. We say, we as a corporate, we can be your customer. Please show us what you have. We are happy to learn from that, and please showcase your abilities to us. In the fourth line, I put also a very, let's say, popular strategy of corporate venture capital, that is the pre-M&A strategy. So you have companies like Cisco or Intel Capital who have really, let's say, built a whole legacy of acquisitions based on this pre-M&A venture capital approach. And the rationale here is take a minority first, look at the business, try to understand better how the business, how the management is performing, and then take your decision if you want to take a majority in that company. So, as I said, there are the American players who have kind of really mastered this kind of approach, using venture capital in as a pre-M&A strategy to de-risk your future M&A projects. And very often these corporate venture capital units are part of the M&A departments of these corporates who apply this strategy. Then a different strategy, which I would call exploratory or visionary venture capital, is really to understand and learn who are the game changers in your industry. And that can be very, these kind of moonshot investments. What will change, let's say, our industry in the next 5 to 10 years? Quantum computing could be one example, or fuel cell technology, is it coming or not? So you take a few bets in order to understand better the game changers here. Then a more pragmatic approach is the new business building, where you invest in businesses that you believe they have the potential to become one day a new business unit for your corporate mother company. That's clear. You start with what you have today, and you typically look left and right, what could be a good, let's say, addition to your existing business. And here you do this kind of new business building by investing in startups who you think provide the potential to grow beyond their current size into a new business for your mother company. Existing business build-up is something where you help an existing business to reach out to also an existing customer base by using digital tools, for example, to reach out to existing customers or suppliers, strengthen relationships. So it's a little bit like the internal optimization process, but here more with the customer view, that you say we want to build closer relationships to our existing clients, to our existing suppliers, and we work with startups who have the tools that allow us to do so. And then business extension is one area which is of course an interesting one, where you say, well, we want to extend our existing business by the next dimension. So that is, to give one example from the chemical industry, you are no longer selling just the chemicals per kilogram or liter, but you say we also will sell data from, let's say, drones or from satellites. And if you sell these data in combination with, for example, a herbicide or a pesticide in farming, you provide a service where you tell the customer when and where and how much a herbicide should be applied. And this is rather a service than selling a product. So this is what I would call the business extension, where also you as a corporate then eventually might move from selling just the product by kilogram or by per liter to a service, very much performance or result oriented. So this is also a strategy that is often seen. And then finally, some examples which I also have seen: PR goals, HR goals, where people say, well, we do venture capital because we want to be recognized as a modern company, or we do venture capital because we want to develop our colleagues, that they develop more an entrepreneurial and more startup-like attitude. Or we invest in venture capital because we want to make a significant financial return. So these are some options, and a summary of what I see as corporate venture capital strategies today, not just, again, in the chemical industry, but also outside of the chemical industry. And yeah, open for questions and comments, and I look forward to our discussion.